What is up, guys, and welcome back to the Capitalist Investor YouTube channel, back with another video. And today's video is Starbucks stock review. Starbucks ticker code SPUX with a current market price of $77.78. My holding for disclosure purposes is 12.09 shares, thanks to the fractional sharing from Free Trade app. Without further ado, let's get into the video. All information from this video is from the 2019 annual accounts. Revenue comes from three main sources: company operated stores, licensed stores, and other. Let's talk through each. Company operated stores make up 81% of the revenue. Licensed stores then make up 11% of the revenue. Interestingly, licensed stores have a lower gross margin, and this is where Starbucks receive a slice of the pie for branded products under these arrangements. The business model is great for one thing, and that's growth. Think of the cost savings for Starbucks by not having to set up these 15,000 stores through their own pocket. It allows for global expansion without the price tag. Since 2015, their store count has grown by 35.6%. In each year, the net opening of stores were far superior in the licensed stores than the company-operated stores. This was the exception of 2015 and 2018, where Starbucks closed net 180 and 680 licensed stores, respectively. The last area of revenue is other. And what is this? Well, typically this is ready-to-drink beverages, which are sold in supermarkets outside of the company-operated stores and licensed stores. These make up a small part of the revenue, so I'm going to move on. From the annual accounts, it is evident that Starbucks are making a huge jump into the Chinese market. In 2016, China's store count was 10% of total company-operated stores. Fast forward to 2019 and it has rocketed to 23%. If you look at the accounts, Starbucks have been adding stores to China much faster than any other geographical location. China is a largely tea-drinking country. Starbucks are entering this market to push coffee. The average revenue per person on coffee in the US is $260 in 2020 compared to $6 in China. Should also be known that China spent 915% more on tea than coffee in 2020. Conclusion: the USA loves coffee and China loves tea. Starbucks aim: make China love coffee. Starbucks are going big on China in the hope of becoming the market leader in premium coffee in the country. Moving on to the product mix. Drink is obviously the dominant product, followed by food. I'd expect food to increase in the next set of accounts, as before this epidemic I noticed a lot of new high quality foods being introduced into stores. Starbucks' biggest identified risk themselves was impact on the supply chain, which is bound to have an effect from the epidemic that we are seeing. So how about the fundamental numbers? Revenue has improved year on year, therefore Starbucks obviously is selling more coffee year on year. Cost of sales has grown at a slower rate, which is good news, along with gross profit increasing from 2015 figures of 59.9% to 67.8%. Good news also that net profit has increased year on year. Therefore, for me, the income statement is golden and there's no more to be discussed. The balance sheet paints a widely different view. Starbucks' liquidity has shrunk significantly from 2018. Starbucks' current ratio has shrunk from 2.2 to 0.91. This is a big decrease over the period to 2019. However, comparing to the like companies, this is comparable. Companies enjoy high volume of turnover, and recurring sales can often operate with lower liquidity, as can be somewhat assured that they can move product to generate income. Starbucks have taken on 10.7% more debt and reduced their asset base by 20.44%, sending their debt to asset ratio up 39.2% to 1.32. The lockdown is unlikely to send them into bankruptcy, but it goes to show you how low liquidity is dangerous. Overall, I am not too concerned about the level of debt, as the business continues to grow sales to meet debt repayments, but definitely an area to watch. So, what about the dividend? Well, the company does pay a dividend, and the payout ratio is 48%. Well, it was in 2019, and this is a suitable level for me. That's it for today's video. I do have to mention that I do not, however, offer buy or sell recommendations in my videos, and if you do invest, it is at your own risk. I hope you've gained some insight from the overview of their most recent financial statements. If you've liked today's video and you're new to the channel, be sure to subscribe for more content like this. Let me know in the comments below, do you think SPUX is a buy opportunity or a sell opportunity? And let me know what stocks you would like me to analyse next. Until next time guys, peace.